right, all right. We are back with a special edition of the Kansas City Commercial Real Estate Market Pulse, which is sponsored by my firm, Midwest Commercial Real Estate Advisors. We got a super special guest today, my business partner, my longtime friend, Tyler Cauble, down in Nashville, is here. Tyler, what's going on today, man?
Man, just rock and rolling. You know, one of my favorite things, because I do this too, like even though we're basically parallel in the country, I'm down in Nashville. I even talk about when we go over to Chattanooga or over to Knoxville. It's like we're going down to Knoxville. Knoxville's north.
I'm looking at my big map right now, and just to confirm that Tennessee is down from Missouri. Okay, so
Well,
just
all right. Devil went down to Georgia.
Yes. That's
what's going on, man? It's look, everything's great here in Nashville. It's actually a nice crisp day, which is nice because it was down to like the 20s for a little bit. I'm getting ready for a trip to Japan on Monday, so this is actually like one of the last things I'm going to be doing for the year.
Yeah, well, tell us about that, man. I know that you're taking some time, and well, one, we haven't got to talk about this. How the heck did you choose Japan? I am super jealous. That is awesome. Yeah. That is so freaking cool. And then number two, like, what are you doing over there, right? Like, let's just talk about that, and we'll get into the show here soon. But I got to understand why you're going to Japan for 3 weeks.
Yeah, well, I got married on November 22nd.
All right.
And so we decided that was going to be our honeymoon. And so my number one is Japan. Lena's number one is South Korea. So we're going to spend time in both of them. So we wanted to, every year, December 15th through January 15th, I take off, right? That's my sabbatical. And it's a great time of the year if you're a commercial real estate professional to literally just take the whole damn month off. Because here's the thing. You're not really going to miss out on much. And it took me probably 5 years of being in the industry before I realized, you know what? I can just literally shut the laptop for 30 days, work on other things, get my mind, my headspace somewhere else. And it has made me a far more productive human. And guess what? As much as I am juggling, which we are all juggling a ton, nothing has ever literally or metaphorically caught fire while I've been gone. So it's, but I will tell you this, I come back and I'm far more productive. So we figured, hey, why don't we go spend several weeks out of the country doing whatever we want. And we picked Japan and South Korea. So we're flying from Minneapolis to Tokyo. Then we're going to Kyoto, Osaka, Shirakawa, a couple of other very small Japanese towns. And then we're going to fly over to South Korea, hit up Seoul, Busan, another couple small towns there as well. And we're backpacking, dude. Like we're literally just taking backpacks so that we're moving like every 2 to 3 days. So it's going to be a lot of fun.
That's awesome, man. Well, be safe over there. Enjoy it. I'm sure we'll be in touch a little bit. But yeah, that's exciting. And, it's one of these things that I've been thinking about a lot. I was thinking about this because people often reach out to me, especially just that know me very closely. And they're very concerned. They're very concerned that I'm going to burn out. And until they know who I actually am and my personality and the way that I set my life up actually is not as burned out as you would imagine. I have set my life up in a way that I have strategic time every single day between 8 o'clock and 9:30 that I don't answer people. I don't start my day, right? I am at church. I am doing the things that I need to do to get my mind right. And so, and I just have a chemical makeup that is a little bit different than I think a lot of people out there, in the sense that, my strengths are discipline, achiever, focus, and competition. So like when I take time off, it is hard for me. And I know that about myself. And so I have created ways throughout the days to do that, right? But I was journaling on this the other day because I don't want people, as our companies continue to grow, as our influence continues to grow, to like listen to me and say, dude, you got to grind it until you can't grind it anymore. Like, that's not what I'm telling you. What I'm telling you is that my personality and my strengths and my talents allow me to push really hard for a really long period of time. It's why I run ultra marathons. It's why I competitively row. It's like this thing that is ingrained in me, and that is okay, which suits me very well. But you may not have that, and that's all right, and it's okay. Tim Grover talks about, he goes, man, this people's talking about this grind all the time is a bunch of BS. And he goes, if you just continue to grind, you're going to grind yourself into dust, right? So my grind is a strategic grind. So I wrote this down. You need to be relentless in the work, but wise in the recovery, right? Relentless in the work, but wise in the recovery. So you may need some time off during the year to do that. You may need time during the day. My routine is much better just having it strategically focused throughout the day. So I just wanted to mention that, and just kind of share some insights, because I think that people look at maybe way my schedule is and like, oh my gosh, I got to set my schedule up that way. Alex Hormozy talks about morning routines are a bunch of BS. That dude likes to stay up late at night. Like, you can be very successful and do that. But for me, having 3 children, 6 and under, and always for the last 15 years getting up between 4 and 5 a.m., that works for me. And it's okay if that doesn't work for you. Do you have any thoughts on that, Tyler?
I am hyper protective of my time. I have people reach out that want to pick my brain on the market. And it's like, no, I don't have time for that. You don't need my opinion on the market. If you like, jump into my office hours live stream, right? I don't have time to hop on a 15-minute call to tell one person how the Nashville market's doing. I have my non-negotiables too. Like, every morning, I built a sauna, a steam sauna in my bathroom.
Yes.
Because waking up in the morning, I've had back problems from football or lacrosse. I don't know which one it is, since I was in high school. And getting in the sauna every morning makes me feel substantially better for the day. I also get up between 4 and 5, but I'm also in bed by like 8:30.
Yeah.
Right. Which means that I'm very, I don't like going out that often anymore. It's just not productive for me. Like, when I was first networking into business and going out with everybody else, like, that was great.
Yep.
Now I don't need to do that. Like, let's grab coffee or lunch. I'd rather go to bed at 8:30.
That's exactly right. Yeah.
But yeah, man, I'm hyper protective of my time. I think you have to be.
Absolutely. Well, I forgot to mention 2 things. One, this is an interactive show. So thank you, Jason Sneed, and thank you for the call earlier, Jason. We had a rock star call earlier today. Got me pumped up and excited. You want to drop some questions in, like Tyler just mentioned. If you would like to ask Tyler and I a question today, drop it in. We are live on YouTube. We are live on LinkedIn, and we are monitoring the chat. So thank you, Jason, for being here. We very much appreciate it. Okay, so Tyler, this year was a big year because you did something that many people have not been able to accomplish. You're the creator of the CRE Accelerator, a national mastermind helping aspiring investors and brokers break into commercial real estate. But you created a platform for people to engage on. Tell us about what happened in your mind, because I know the answer to this, but bringing all of these people together, watching the interactions, why did you do that this year, and what has been the result of that so far?
Yeah, it's been interesting, man. So, I got started on YouTube back in 2020, and really it goes back to 2013 when I first got into the business, trying to learn as a commercial real estate broker what the hell I'm supposed to do on a daily basis. When I was at a boutique firm, my boss was developing. He didn't want to teach me. Nobody at any other firm wanted to tell me anything because they just saw me as competition. And back then, there weren't as many podcasts, or there was definitely no YouTube.
Yeah.
I think literally there were probably 2 commercial real estate podcasts back then. 3, 4, 5 books on Amazon. I read every single one of them within the first month, right? There was no opportunity really for me to learn. And I found that incredibly frustrating. And so I always told myself, like, hey, once I understand enough about this industry, I'll help other people do it. So I started teaching commercial real estate investing at the local RIA meetups back in 2017. And I wanted to do a YouTube channel. I just didn't have the time. I mean, that's the thing. By the time you understand enough about how commercial real estate works, whether you're a broker, investor, developer, whatever, it doesn't matter. You're too busy doing the damn work, yeah. Right? To actually take time out of your day to do stuff like that. And so it wasn't until 2020, right, when the whole world shut down. I'll never forget, there was this stock market run. It was like a Wednesday, record lows. Thursday, record lows. Friday, record lows. And I swear that Friday, every single property we had under contract on behalf of clients terminated.
I remember.
It was like a comedy show. I mean, I was just fielding calls all day. Hey, go ahead and terminate the PSA. Terminate the PSA. No matter what we tried to do, we couldn't salvage a single one. Everybody just said, yeah, we've got to hold on and just see what's going to happen. And so I went from being out of the office 99% of the time, networking, talking to people, kissing hands and shaking babies, right, to being stuck in the office by myself. And so I bought a camera on Amazon and we started it from there. And so really at first, I had just started creating content to hopefully have somebody realize like, hey, this guy's in Nashville. He could represent, his brokerage could represent me buying commercial real estate. And I'm going to call him. And we got business that way. But a couple of years, into it, really it was probably a year into it, I started getting comments like, hey, do you have a course? I really need to dive further into this. Will you start consulting me on this stuff? And I didn't have any of those options because I didn't go into it trying to monetize it. So we ended up throwing a course together. I ended up opening up my calendar for consulting. And then the questions started coming in of, hey, do you have a mastermind?
Yeah.
Do you do in-person events? Can we come and see you? And so I was like, okay, you know what? I don't know what I'm doing at a mastermind. Let's put that off for a while. But I kept getting that. And so August of, I guess, 2 years ago, so 2023, I launched the Accelerator. And, it was a mastermind for commercial real estate investors. And I think through May of 2024, we probably brought on 10 or 15 people. Like, it was such a slog.
Sure.
And then, something happened in May where it really just started taking off. We started bringing in 10 to 15 people a month. And so, you and I that October decided to start the Brokers Mastermind.
Yeah. Right.
And focusing exclusively on getting brokers to $500,000 to $1 million in commissions earned a year so that they can start investing. And now, we're between the two masterminds, we're close to 200 members today.
Wow.
And, you and I have gotten to analyze and review hundreds of deals. So like the interesting thing is like we've created this really, really amazing community that I wish I'd had. You probably wish you had when we both got started in commercial real estate that just didn't exist because most people weren't willing to reach down and pull you up or send the elevator back down for that, at all. And, now it's been great for everybody else. I mean, the results speak for themselves. The amount of business that we've helped brokers close, the amount of deals that we've helped investors acquire. But honestly, like, I think that I'm a sharper investor, developer, broker today just for having been involved in all of these conversations. Like,
oh, yes.
As many deals as you and I have done, we can't have done every deal that's out there. I mean, for example, in the Brokers Mastermind, I'm learning about water right sales.
That's right.
That's not a thing in Tennessee. That's really interesting. I want to know more. So anyway.
Absolutely. And it's been incredible to see not only the growth, but the continue investing in the technology right around this, because what I am seeing is that you create community through content, but then you also bring that community together through this technology platform, which is now matchmaking people. And we're starting to see deals getting done and referred out from state to state. So I got this big map behind me that shows, all of the United States, the continental US. And we've got brokers all across and investors all across the country now being able to connect with each other and then come in, meet people live, in Nashville, maybe Kansas City, next year, and getting those people together and, just sharing the knowledge and building those relationships. It's exactly what you have to do. We are in the information and relationship business. And through AI, we are now teaching people how to find that information, weaponize it in the right way, and be able to, really attract their ideal customer profiles through that information. And you can do that now easier than ever, right? You just have to be willing to put in the work. Like, I just sat in here in this office with one of my brokers, and the biggest thing that I'm trying to teach people right now is you need a playbook. Like, you have to give me your playbook. What is your playbook for 2026? Well, we need to evaluate how 2025 went. What plays were you running and what didn't go well, right? So we need to pivot and change a new new strategy, right? And strategy is all about prioritization of resources against unlimited options. Okay. And as a commercial real estate investor and broker, there's unlimited options out there, but you have to have a strategy. Getting a lot of comments about my sweatshirt. Yes, I've got it here. This is a new one, guys. It's not my, I survived 11 interest rate hikes. This one has our buddy Jerome Powell on the front of it, and it says, all I want for Christmas is lower interest rates. So yes, you can definitely check this out at credaily.com. Go to their store. I am a big proponent of that newsletter. I talk about it quite a bit. But yeah, people are like, what is that? Oh, there you go. All I want for Christmas is lower interest rates. And that I think is a good segue kind of into our next topic here. And Tim, thank you for your questions. We're going to get to them here very soon. But Tyler, every year gives us some curveballs, right? Let's warm up a little bit talking about what made 2025 unique from your seat down in Nashville and the deals that you've been working on.
Well, I'll tell you this, the moniker survive till 25 became survive till 25 plus 12.
Yeah.
Right. I feel like that phrase was so overused for years until we got to 2025 and everybody was like, oh man, I guess we got to keep this going. It was a very odd year. We all thought that we were finally going to pull out this year and things were going to get back to the roaring, market that we saw in 2021. It's really not what we saw. But what I will say, in terms of brokerage volume, in terms of sale volume, leasing volume, not a bad year.
Yeah.
People are still moving. Things are still happening. It's really a hyper-localized, hyper-specific type of market where you can't say, oh, we're not investing in office space today. You can't say we're not investing in retail today or industrial deals aren't penciling or new construction doesn't pencil. It really is so specific on a deal by deal basis. And so for us, it's making sure we've analyzed every single opportunity. We didn't buy anything for over a year until the end of 2024. So almost a year ago today, we closed on New Year's Eve, which, by the way, don't ever do that.
Yeah.
Sometimes it happens. Sometimes it just happens. It's happened to me twice in my career. I've had closings on December 31st, and nobody's happy about it. Even I think the seller who initially said, no, we have to close by the 31st is not happy. But since then, I've bought 2 more properties. So 3 properties in the calendar 12 months. We're closing on another one at the end of January. We feel really good about where we're headed, but it's not this like rocket ship, hold on tight, everybody's experiencing that type of feel. It's kind of nuanced.
Right.
It's interesting.
Absolutely.
It was a weird year.
It is. And I got to put this up by Tim Grambling. Kansas City just felt that sweatshirt in its soul. Yes, it did. Tim, my man, I appreciate you being here. That is an awesome comment. But look, I just published a market report saying that the green flag is out for commercial real estate, which I know is a bold statement. So let me describe kind of what I mean. Here's the paradox that everybody's confused about. You've got headlines saying that commercial real estate prices have climbed for the 5th consecutive month. And then you've got other headlines with the Wall Street Journal saying commercial real estate is too cheap to ignore. And both are true. And that's exactly why the green flag is out. And there's that nuance component that we were talking about. Prices are rising, but that means the bottom was 6 to 12 months ago, and they're still 17% below the 2022 peak, right? And that discount is narrowing fast. And so investors, the nuanced investors, are buying now while it still feels uncertain. In 12 months, when that market feels safe, that 17% discount is likely to be gone. And so that green flag really means that the race has kind of started, but most people are still in that pit lane, right? So trying to resolve that confusion, put a little bit of urgency in there, I think can position you ahead of the curve. But the data out there is very nuanced and it's very confusing for people.
It's weird. I mean, here's the thing. It all comes down to the fundamentals of real estate, which I feel like everybody says every time there's any sort of recession, if I could use the R word, right? I mean, but let's be real. We're kind of in a recession, and we've been in one for a little bit. whether anybody wants to recognize it or not, simply because capital is pulling back. People are tightening their belts. Lenders are getting pickier, right? That's all the stuff that happens in a recession. So whether like for definition purposes or not, let's act like we're in one for now. All you have to do when that happens is just get more analytical, right? Do the research, follow the fundamentals. They say you could see who's swimming naked when the tide goes out.
Yeah.
And that has been very apparent for the last 24 months. But you know who's still closing deals are the people that follow the fundamentals, that never got aggressive in their underwriting, and that bought deals right. That's all it takes.
Yeah. And that's what we're all about, is those fundamentals. Now, Tim had a good question as well. Tyler, I'm going to lob over to you. When building a network through masterminds and tech, what did you have to do intentionally to stop doing that was limiting the quality of the relationships that you were forming, right? I mean, you have a huge presence, people reaching out to you on a regular basis. You are a sphere of influence. And so like, you've got to be very choosy with who you're going to be spending your time with. And Tim, I think, presents a really good question here.
Yeah, it's a great question. I don't know that there's anything necessarily that I had to stop doing, but I will say what I see what works and what doesn't work, right? What works for me is 1 to 2 people, 1 to 2 real connections, real conversations. What I see people get wrong all the time is, they run around the room handing out business cards. Who care? I'm throwing that in the trash. Couldn't care less. I don't know who you are, and I don't need to take the time to send you an email. That's just me personally. However, if I go to a networking event and there's 1,000 people there, all I need is 1 to 2 actual conversations where we can go deep. I can follow up with a coffee or a lunch, and an opportunity is going to come out of that. It happens almost every single time.
That's exactly right.
All I do is just, who are the 1 to 2 people I need to talk to, right? Like the last Emerging Trends event that I went to, ended up speaking with a longtime friend, a broker who's developing a project now. And, I can't wait to get out there and go and see it. And so he and I got lunch on the calendar. I'm going to get out there and see his project. We might do some videos on it, right? The other one was a banker that I'm looking at having refinance a deal for me. Well, guess what? He and I get to sit down next to each other at a table for 2 hours and talk, right? So like that was more effective for me than meeting 30 people, hands down. Right. So that's my recommendation. 1 to 2 conversations.
It's a really good recommendation. And I'm just going to double click on that, Tim, because I think that going deeper and less wide is very important. And so you think about the leading indicators that I'm trying to track on a regular basis. Well, what makes an outstanding day for me, right? Well, first you need to define what your outstanding day looks like, right? Like if you get done at 5 o'clock, 6 o'clock, and you said, man, that day was outstanding. What happened? Well, for me, it is, did I have 2 to 3 revenue generating meetings with somebody who can buy, sell, or invest in commercial real estate in Missouri, Kansas, Nebraska, Iowa? Okay, boom. That's very clearly defined, right? Also, did I have 5 meaningful conversations with somebody who can buy, sell, or invest in commercial real estate, Missouri, Nebraska, and Iowa, right? Like that is really, really important for me to be tracking on a regular basis. So when I think about my relationships and who I'm trying to build them in, that has now generated people on my favorites list on my phone. If you're not in my phone as a favorite, you go straight to voicemail. If we're working on a deal, or we're working on trying to get a deal or something like that, or working on something together, you become a favorite in my phone. And now you have access to me, right? In regards to being able to talk on a regular basis. And now there's 6 to 12 people in there that I'm deepening those relationships with, right? The other thing that I'll point out that Tyler has done is, and I have done also, is instead of having a bunch of one-off meetings, be the creator of some sort of event where you can speed date right there. And Tyler's done it through his office hours. I've done it through meetup groups here in Kansas City. And you have the ability to have that 5, 10, 15-minute conversation so you can filter out who's real and who's not. So you're not spending your time being, what seems to be productive, but you're actually just busy, right? I think that's really important to kind of define for yourself.
Man, having the office hours for me was one of the best things I ever did. Before that, it was, hey, I have a breakfast meetup every 2 weeks, Thursday at 7:15. You're welcome to show up. I'm going to be there for 45 minutes no matter what. Let's do it there. And I would try and get as many of those people to those coffee meetups as possible, because then we're actually doing something productive. I get to, introduce you to other people. You get to have conversations that are not just that conversation. It's much more productive for everybody involved instead of let's hop on a call and talk about the market. You don't need me to tell you what the market's like.
That's exactly right. Go read my newsletter. Go watch the podcast. I'm giving a market update there. Now,
that's right.
We're getting some questions in regards to what we actually felt on the ground here in 2025. Well, I'm going to tell you one thing that I think is crucial for you to understand as a commercial real estate investor and a broker out there. Institutional money is back. They are net buyers for the first time in 3 years. I don't play in that space very much, right? But I track them religiously because if they are making moves, I know that Kansas City being a tier 2 market, we lag those moves 12 to 15 months. Right. Okay. So they're back, right? Meaning they acquired $4.6 million more than they sold, which is the first positive net flow since 2022. Why they're back? Well, look at my sweatshirt right here, right? Look at my sweatshirt right here. Okay. The Fed rate cuts, the borrowing costs dropped from 7% to 6.5%, and it's falling. Cap rates have somewhat stabilized, right? They're no longer widening against the 10-year treasury. And valuations, Jake Clark, shout out to Jake Clark, just put a great post out on LinkedIn. Go follow Jake Clark in Nashville. He did some research in regards to Altus Group's latest market report talking about the seller buyer bid ask gap. But valuations hit a fair value after a 17% correction from the peak. So seeing that happen, that is one trend. And I always say, like, the trend is your friend, right? So remember what the trend is. You have to know what they are. But seeing that institutional capital be net buyers for the first time since 2022 shows me that 2026 for the market that I operate in, the size of deal that I operate in, is likely to be a really good year for transactions. In Q3 of 2025, which was just last month, right? $150 billion of real estate was transacted. Okay, if you annualize that, that puts us at $600 billion for the year. Right? We're not going to hit 600 billion. We're closer to 400 to 500 billion this year. But if that trend continues and we get back to 600, 700 billion dollars, we're back to 2022 levels, people. The green flag right there that I'm talking about, it is out. So how are you positioning yourself? That's the question that I'm posing back to investors and to owners and to buyers. What are you doing to get ready for that opportunity, right? Maybe you have a portfolio that you need to sell. Maybe you have a deal that you need to get off of your chest, right? Off of your balance sheet. Maybe you need to figure out, hey, this is a good time for me to actually go acquire, and here's why, right? Those are all things that I'm seeing and feeling on the ground. Anecdotally, out of the 12 deals that we have listed, 9 of them are either under contract or have an accepted letter of intent on them right now. 3 months ago, 1 of them did. Okay, so I've got over 120 CA signed in the last 45 days. So that's showing me that buyers are starting to reach back out. So that's what I'm seeing kind of on the ground. Anything that you wanted to add to that, Tyler?
These institutional guys have all of the quants, the analysts, whatever you want to call it, that you and I could only dream of. And when they start to make more and more aggressive moves in certain aspects or areas or locations, whatever it is, you should start paying attention, right? Because they know something that we don't know yet.
Yeah.
And so, I'm not a fan of what a lot of the bigger guys do, right? I'm not a fan of build to rent. We could talk about that if we want. I know that's kind of controversial, but there's something there, right? And so I like to follow them, see what they're doing, and think through, is there a play at my level for this?
That's exactly right.
You and I have been talking about data centers quite a bit. Guess what? For 99.9% of investors out there, there's nothing that any of us could do for data centers. I don't have enough money. You don't have enough money. And I mean that like you as in everybody listening right now.
Yes.
Right? These things cost hundreds of millions of dollars to build. They are so hyper specific for the use that there's a massive amount of risk there. That unless you have a relationship with a tenant, you're like, don't ever build that on spec. That's crazy. However, as my mentor likes to say, I want to be the flea on the dog's back.
There you go.
Go follow the data centers. Build the 10,000 square foot flex space right next to them. Buy up 10 acres of land and do industrial outdoor storage right down the road. go buy 20, 30 acres of land and build a single family community, because there will be workers at that factory that need housing.
Yep.
Right. So what can you do to follow them?
That's exactly right. That's fantastic. We've got some more listener questions to get to. One thing that I just have to drop real quick on the pod here is, here's a stat that blew my mind. Property stocks are trading at their biggest discount to U.S. equities in 20 years. Why does that matter, right? Well, public REITs, which own commercial real estate, are trading at a 20-year low relative to the S&P 500. So the translation for you is that Wall Street thinks real estate is undervalued. And when Wall Street thinks something is cheap, they buy. And when they buy, prices rise, right? So I just needed to drop that notion of there's another kind of hint at commercial real estate. And I've heard multiple people on podcasts now, big equity analysts, say, commercial real estate equity is starting to look really attractive right now, right? So again, that discount window is closing. We're still 17% below the peak, but that's narrowing fast. This green flag does look like it is out for 2026. Okay, I'm gonna get off my data-driven, information. Tyler probably is like, "Good golly, this guy is always talking about freaking numbers," stuff like that. I'm obsessed with it. I know I am, but that's why I win a lot of business, because people reach out to me, property owners. Logan, where do you see the market going? Well, I don't see it going anywhere. I will present to you many different points of data that are validated and let you formulate your own opinion. Sure, I have my own, but you need to create your own hypothesis around there. So anyways, Jason wanted to ask Tyler off that topic just a bit. What are some of your top favorite sources that you use for deepening your knowledge and understanding for commercial real estate, man? What do you like to point to?
That's an intense one. I have a wide variety of sources that I dig into now, and a lot of them are actually ancillary to commercial real estate, because I don't feel like there's a lot that's happening quickly that's changing the commercial real estate industry very fast, right? I mean, I feel like if we were in healthcare, there'd be so much that we'd have to stay on top of all the time. Commercial real estate, though, like specifically right now, I'm going all in on, modular housing, manufactured housing. How can we build affordable units within factories? And so with that, I'm honestly using YouTube, right? I'm the chef that eats his own cooking.
Yeah.
I love learning on YouTube. I think there's some phenomenal creators on there that do a lot of research. Outside of that, though, Wall Street Journal, New York Times, those are two phenomenal sources for business and for commercial real estate. I know this is kind of funny. I actually don't really pay a whole lot of attention to what's going on in commercial real estate news. I want to know what's going on in the business world. Mm-hmm. I want to know what's going on in tech. I want to know what's going on in all of these other industries, because, I feel like, and I see this, Logan, I'm sure you see this too. A lot of people in the commercial real estate world get hyper myopic on commercial real estate. The only thing that exists in their world is commercial real estate. And that's fine. But in an industry that doesn't really move quickly, that doesn't change that much, you're going to get stuck inside the box and you can never think outside of it. But if you're paying attention to business and tech and healthcare or whatever else may be out there, you're going to start thinking, okay, well, that's interesting. Here's a business trend that is happening right now. I keep reading articles on that. How can we take advantage of that in commercial real estate? Here's an interesting tech trend that's starting to happen. How can I take advantage of that in commercial real estate? And so pull things from other sources into your arena instead of, again, just hyper focusing on what's already happening in commercial real estate. You'll have a far more successful investing career.
Yeah, I've got to just highlight this. I mean, this is something I've learned from Tyler, and people keep asking me about what books are you reading and what resources are you looking into. I've got my normal commercial real estate ones because I'm obsessed with data and understanding that, because I do think that reading between the tea leaves helps me understand and make some of these hypotheses. However, I was just talking to somebody the other day and I was like, I actually really like to look at, business models and ideas from other industries to see how we can adapt them to commercial real estate. Alex Hormozy being one of them. How do we adapt $100 million leads to commercial real estate? Well, join the Brokers Mastermind at CRE Central and we will teach you how to do that. Exactly. Right. How do you create your offer for commercial real estate, right? What's the 100 million offer? The offer so good that somebody would feel stupid saying no to, right? Like that is what we have to do as investors when you're trying to get a property, and as brokers when you're trying to win a listing or sell a property, right? That is exactly what we are doing on a regular basis. So that's great advice. Really appreciate that. Just got a little bit of ideas here, going through Kansas City versus Nashville in 2025. Kansas City saw multifamily stabilization. We saw concessions fading, mostly just because supply and demand here. We have about 25,000 people coming to Kansas City MSA. We have 14 counties that touch the Kansas City MSA, so it's very different on each one of those. But we're only delivering, between 5,000 and 6,000 units every single year. So there's a supply and demand imbalance. If you want to live in a single family home in Kansas City, that is still pretty difficult to get into in specific parts where the schools are really good, which is now driven big multifamily, increases 3% still in Kansas City year over year. So we continue to fall on this list of, rent growth in Kansas City, and people are like, what's going on? Well, we just have not built, guys. Like that's just the case. There's nothing else to say about that. So multifamily has done well. Here's what my favorite trend right now, where I'm trying to spend, 50% of my time on figuring out, is the small bay industrial side of the business, right? So we are working on around 250,000 square feet, pre-construction, pre-design, working on getting that brought out of the ground in 2026. We are representing businesses every single week trying to find space. And that is a big trend that I think is not just in Kansas City, but is nationwide for sure. So retail still under 4% on the vacancy side in well-located neighborhood retail shopping centers. So that is impressive and exciting. And then here's one thing that I will say. We saw kind of a drop, the last couple of years on these value add deals, right? The 1970s type of vintage that has kind of gotten out of favor a bit in regards to trying to do these value add deals. Why? Well, interest rates don't allow for it, right? So you've got to be able to figure out, does your yield on cost actually make sense where you're at to be able to do these value add structures? And there's a lot of CapEx just hiding in those 1970s and 60s products. So, but that has started to kind of come back, right? As cost of capital has come down a bit, people are starting to do more value add opportunities. So we are definitely seeing that opportunity here as well. Tim Grambling, thanks again for being here. We really appreciate it. He dropped just a nice knowledge bomb from his brain plane here. He says, time gets wasted when you optimize for access instead of alignment. I mean, Tim, if you really wrote that, which I'm hoping you did, fantastic writing there, my friend. You might need to just take up a gig here on one-liners. Hopefully you could tweet that out right there. Just give me a shout out. But couldn't agree more with the time gets wasted when you optimize for access instead of alignment. Jason's back. He wants to ask about Flex in iOS, which I'm gonna lob this over to Tyler because that's what you're investing in right now. Where would you put an emphasis on investing, iOS or Flex or both of them?
I love the idea of iOS. I think it's a lot more difficult to actually bring to fruition from the standpoint of, unless you're institutional and you're really analyzing these deals all across the country, how are you actually figuring out what those rates are going to be? I think that's the most difficult part. It's just comping it. Like, how do you actually figure out what the demand is and how do you actually price it? And I think if somebody solves that, it's off to the races. So for me, iOS for the most part has become an ancillary use to properties that we already have.
That's right.
So like I've got a 330,000 square foot shopping center on 32 acres. We've got way too much parking. So we've taken a huge chunk of that and we've dedicated it to iOS. So we've just got truck parking there. It's been a great thing for us. But Flex, on the other hand, incredibly quantifiable, very easy to show the demand, the pricing, the cost to build, all of that. We love Flex. I mean, I'm working on a 300,000 square foot development just outside of Austin, not too far from the chip manufacturing plant that's going on out there, out near Hutto.
Beautiful.
We're working on another 25 to 50,000 square feet of flex space at our mill out in Chattanooga. We just finished up 350 self-storage units out there. So, yeah, I mean, I'm all in on Flex. I love it. It's a very flexible product, which, if you're if you're not wanting to be a hyper-focused, hyper-specific, one-sided type of investor, it gives you a lot of outs, gives you a lot of flexibility on the types of tenants that you can put into it, the level of finish quality that you can go to depending on what you want to do, which I love.
Yeah. Jason, just from a tactical standpoint, okay, iOS going to be very difficult to get the zoning that you need for iOS. So go find the zoning map in, I think you're Southern California. So you go find the zoning map overlays that allow for iOS. Good luck getting anything upzoned to be able to put iOS on, right? Unless it's already grandfathered in. Typically, we're going to see a building on that structure, on that site that has yard space, right? So I would take the map, the overlay map, and then I would start to figure out specific areas that have those zonings for iOS, and then you can start to target who owns those properties, what's going on with them, do they have a building on them, do they have a structure on them. Then you might be able to say, hey, there's 2,500 iOS sites. And half of them have a building on them. Here's what the lease rate currently is. Here's what the vacancy rate is, which I'm sure is below 1%. And here's what these are trading at, right? Now you've become that person that is able to have those insights in regards to that. So many folks, I think, forget that part, right? We've had 3 people on this show that have been in the industry for over 40 years. And all of them said, when we got started, we took a yellow notepad and we started walking the streets and talking to the businesses, seeing what was for lease, for sale, what was on the sites, because the data wasn't good that they had. Mind you, they had no data. And so they had to create the data themselves. So get back to the fundamentals. Get back to the fundamentals of doing that, driving the streets, walking them if you have to, right? Get back to that. And I think you can position yourself as an expert in that space. All right, moving on. We've got some standout deals. I want to talk about any notable leasing wins or creative financing structures, deals that were saved this year by rate drops, interesting tenant expansions. I mean, you just mentioned one, repurposing some space. I've been at that beast of a retail shopping center, just that beast on 32 acres. And you just saw, you just see that thing in the back. Have you repurposed creatively some things like that? But outside of that deal, Tyler, what stands out to you from a deal in 2025?
Oh, we bought a 101,000 square foot flex facility out in Chattanooga, anchored by Volkswagen, syndicated it, raised some capital for it. And here's what's really cool. It was like 92% occupied when we bought it. And we brought $1.2 million to the table for just CapEx, right? And fully expected to have to spend that on tenant improvements. But here's the nice thing about flex tenants. They typically don't want anything in their space. So we're now 100% occupied, which is nuts. And we spent $0 on tenant improvements. And so now we're looking at it like, okay, what do we do with all this money? So that's been fun. I enjoy deals like that.
Yeah, that is absolutely fantastic. I'd love to hear the types of opportunities. And I know that was a great partnership between you and the good guys over at Greenleaf. And so shout out to those guys. Dave Kodra. I don't know if I spelled it or said that right, but I remember Dave from years back during the COVID-19 pandemic, and we were on here just talking about real estate deals. Really respected that guy. I mean, he knew his stuff, man, and was doing some really cool office or just buying office deals and repurposing those spaces as well when nobody else was actually doing it. They were just talking about it. Now, one thing that I will say, standout deals for what I'm noticing, not one that I've been a part of, but one that I'm noticing, and it is office to data center conversions, okay? So this is actually something you might be able to try to figure out, all right? And here's why, because there's multiple ways to kind of play in this space. If you are an expert in your area and you can figure out if there's an old, maybe not old, but just vacant office building or industrial property that likely has a big infrastructure already in place, right? And you have water, electricity, fiber, and good location, you might be able to take that property, change the zoning of that property to allow for a data center conversion, and take a big 15, 20, square foot or 350,000 square foot, 20-story tower and turn it into a data center. That is a very interesting play, because you're taking vacant space, instead of making it into residential, you can make it into a data center. And one deal I want to highlight was in Chicago, Illinois, $355,000 or 355,000 square foot property that somebody bought. They went and got a power letter. from the utility company. It already had the power allocated to it. So it was not a shuffle. It was just a reshuffling of it. The power was not being utilized. It did not have to be created. They just got it allocated to the building. And they were able to triple their money in 16 months. So they sold it for $46 million, changed the zoning, got the power letter from the utility company, and now it's being used as a data center. I'm not advocating for that. All I'm saying is that is a really interesting use of a building that nobody wanted to go back to from an office standpoint. So that was a really cool property and a deal. I think we're going to see more of those in 2026. Anything like that going down there in Nashville?
Not that I've seen. I think that's really interesting, though. When you think about these data centers, like trying to make an office building work is not very logistically friendly.
Yeah.
So, if you're going to do a deal like that, obviously you've got to get a killer price per square foot to make it happen. One thing I would say is, the power requirements, the amount of infrastructure that you're going to need, obviously something you have to suss out on the front end. But think through this. Like, there's a reason why a lot of these data centers are being built on a single floor. It makes it far easier for you to move all of your equipment in and out. It makes it far simpler for somebody to manage the entirety of the systems. So, I mean, look, if you can get it for a price per square foot that really, really makes sense, then it's worth it. But, what happens if the elevator goes down?
Yeah.
It's a lot of maintenance, a lot of stairs.
Absolutely. 100%. Very interesting space to keep our eyes on for sure. Some lessons learned in 2025, right? And this is one that I wanted to put on here. I think that speed is important. And I say speed, and it's more about being quick, but not really speed, right? Being quick is important. And now moving from information asymmetry to information parity to where we're at now, which is information overload. Being able to make these strategic pivots quickly, but not in a fast way where you're just rushing things, I think is a big lesson learned for me. Also, focus. Follow one course until successful. That's the acronym for focus, right? Big lesson learned for me in 2025. The number 3 is our good buddy Alan Buchanan came on the podcast, came and talked to the Brokers Mastermind. His book, The Sequence, I've got it right here on my stack. Go check out the book. His Qualify framework. I look back through 3 or 4 deals that I worked on a long time here in Kansas City this year, and guess what? I got a big fat goose egg, big old fat goose egg on all of those deals. Made no money, lost a lot of time. Sure, I learned some things, but I did not qualify those deals going into the front end. So I will be working through the Qualify framework on every single project that I'm working on in 2026. And how am I going to do that? Well, read the book, go get the book. But inside of the CRE Central, Mastermind and Brokers Mastermind, you will be able to have access to a custom GPT trained specifically on the Qualify framework. So you can upload your deal, upload all the information. It'll ask you prompts and say, hey, here's your output, man. Here's what you need to go work on the Qualify framework. So pretty cool stuff there, helping me to make decisions faster, right? So that speed part of it is right there, and be able to quantify this and filter them really, really quickly. The last thing I'll say is just relationships mattered more than ever. I went really deep on some relationships. This quote that I've mentioned multiple times on the pod here and to people on LinkedIn is that you're never going to outperform your inner circle, right? And so I think that is extremely important on those things. Underwriting discipline obviously pays off all of the time, but it's showing up really, really heavily in 2025. And then this local knowledge component, right? That outperformed the national noise. We talk a lot about national news and things like that, but man, the local things that are happening in our municipalities is very different than what's going on a federal level. So understanding that and positioning correctly has been a big lesson learned. So I wanted to share some of those. Tyler, you feel free to add any lessons learned from yourself in 2025.
Look, biggest thing for me, like we always underwrite so conservatively. That 100% paid off. I think it really, really, really matters. You can't force a deal to work in a fake spreadsheet before you've ever even wrapped your arms around a deal, right? And I've seen so many people over the years push what's actually been proven in a market And look, that's not to say that you can't push numbers, right? Maybe you can get rents 5% higher than what's going on in the market, but 30% higher than what the property is currently getting, that might be a little bit aggressive, right? Depending on how you're approaching it. You're not putting any money into the building, but you're going to be able to double the rents just because you're actively managing stuff like that, where it's like, dude, if the seller could have done that and gotten 30, 40, 50% more on their sales price, why didn't they do it?
Exactly.
Right? They know more about the property than you do. Why do you think that you can do this better than them? Right? So always be conservative with your underwriting. Don't ever force a deal to happen. There are so many deals out there, thousands and thousands and thousands of opportunities. Don't force one to work.
That's great. That's fantastic. Good lessons learned. All right, we're not getting to some of these things. That's okay. We'll have to come back on Q1 and talk about some of those trends that we're seeing. Just follow the newsletter if you want to. That's all out there. LinkedIn post on a regular basis. Got to get to my favorite segment of every single show, right? What's one book everyone should read before 2025 ends? And if you are listening to this, it's December 12th, so you better get on it. Get on it.
You better get to work. Look, I'm going to say this because I just finished it. A Promised Land by Barack Obama. I actually listened to the audible version of it, and he actually reads it. Fascinating book because it goes into basically his life as they started the Senate campaign, then, as he was going through the presidency and everything there. I mean, hearing from his mouth when he's talking about making the call to run the mission that ended up killing Osama bin Laden. Fascinating. Yes. Really, really interesting to hear that perspective on it. So whether it doesn't matter if you're blue or red, who cares?
Yeah, who cares?
Go listen to the book. It's a great book on just American history, in my opinion.
Yeah, absolutely. What an incredible leader. Just putting that out there. I don't think anybody ever debates that. An incredible speaker and thinker and a person of major influence. What he did really well is he put really smart people in place. One of them being Admiral William McRaven, who I'm sure was talked about maybe in that book. Maybe he wasn't, but he was the naval special warfare guy that was, I think, running point on that mission, and pretty incredible to hear his perspective in his books as well. So phenomenal leader. I am going, and if he reads it, I'm going to go put that on my Audible right now.
It's cool. Man. Yeah, I like it.
Appreciate that. All right, I'm big on habits, as you know. So what habit are you leaving behind or maybe doubling down on as you head into 2026?
Really just doubling down on content, right? Every year I try to figure out how can we create more and more content. And so that's the focus.
Yeah, that's fantastic. Oh, man, I just watched Hormozy, man, and he was talking about the content that he would want to have doubled down on going into 2026. And, frankly, I think the space is tough, right? Like, YouTube, LinkedIn, all of it. 5 years ago was a big opportunity. And I think it keeps a lot of people out because they're like, it's already overheated. BS. Get out there and start putting your word out there, man. You got to get started. You're going to look back 10 years from now wishing that you had. But one of the things that he mentioned was, he was talking about Mr. Beast and all this stuff. And I started to see Mr. Beast on national platforms like at NFL games and things like that. I'm like, this is really interesting. He was at some awards ceremony. They were bringing out the short form content people, the long form content people, and the short form got a little bit of an applause. The long form got a really long applause. But then they brought out the live creators, the folks putting content out live, and the stadium just roared. And it was because these people are interacting with their audiences live. Well, what are we doing here right now? Pretty sure StreamYard's telling me we are live on LinkedIn. We are live on YouTube. I don't know if it's true or not. I hope it sure is. I hope the back end's working. My computer's an absolute disaster. But I will tell you that I'm going to double down on live content so that you can get access to myself on a regular basis, the insights that we're bringing. I'm doubling down on our presenting of our deals live on platforms in 2026. So if Hormozy sees that as the trend, I'm going to follow it, and I'm going to make that trend my friend. So I appreciate you saying doubling down on the content. Is there any one specific type of content that you're going to be doubling down on?
More video. It's all about video. I mean, look, at the end of the day, especially on the live streaming side of things, that's AI proof, There's probably enough
Yes.
pre-recorded video out there for somebody to make a copy of me. There's probably enough of my voice out there for somebody to make a knockoff podcast. There's enough of my writing style out there from our blogs. Somebody could redo all of that, but you can't replicate live streams.
No, you cannot. No, you cannot. And, I will say too, on the live streams, you figure out who's swimming naked because the tide goes out on the live streams. You can't answer questions. You can't talk because you have to read something or something like that. You're in trouble, right? You're going to lose people, right? I mean, these episodes, this is crazy. This is episode 46 of the Kansas City Commercial Real Estate Market Pulse, sponsored by Midwest Commercial Real Estate Advisors, your full-service brokerage here in Kansas City, Missouri, Nebraska, Iowa. Give me a call. We'll do some deals. Okay, anyway, selfless plug there. But at the end of the day, like, I see that things are watched 6, 7, 10 hours after the moment that I end this thing. 7 hours to 10 hours of content has been watched. And then I see people post, hey, checked in on the Market Pulse over lunch, and they're taking screenshots of somebody I've never met out in Colorado posting about the episode. I mean, that is just really cool, right? So you want to know how you increase your followers and your audiences. You have to give good content. You got to engage in the way that they want to engage in, and you got to be prepared and be willing to do that. So very excited about doubling down with you, brother, in 2026. Okay, biggest opportunity that you see, man, you're just getting hit up on the CRE Central. I know that little chime. Is that me or is that you? I don't know. Somebody's met. Just so everybody knows, that is our community talking back and forth, chatting on the Brokers Mastermind and the CRE Central and the Accelerator right there. Just probably some deals just going on right now live in there. The little ding, ding, ding. That's you need to be next. You need to be next in there dinging on the Brokers Mastermind. We got some listeners right now that I know we're talking about getting into the group and the CRE Accelerator as well. So anyways,
actually somebody just joined.
There we go.
I guess Chris must have been handling that phone call. That's funny.
Boom, right there. There it is, baby. Live. You heard it here live, right there. More people getting in, listening to this episode saying, I'm sold, baby. Let's go. Let's get some real estate deals going. But anyways, what's the biggest opportunity you see in 2026, man?
Small scale neighborhood development. I mean, you could say that every single year, to be honest with you. That's like, I love those opportunities. $1 to $5 million deals that are not ever going to be replaced by anything. I just love them.
I love that too. Somebody told me the other day, he said, man, I'm not going to have any impact. And I stopped them in their tracks. And I said, you change the world one person, one conversation at a time. How else do you do it? You change neighborhoods one deal at a time, right? You go to East Nashville and you drive up and down Dickerson Pike, and you're going to see Tyler Cauble, the Cauble Group, all up and down that street, right? You change it one neighborhood, one deal at a time. And that just starts to compound on top of itself. All right. 2026 is right around the corner, my man. What's ahead for you in 2026? What's it look like?
Man, it's a lot. We're going to release 2 books on investing in commercial real estate.
Wow.
And we're launching the first true commercial real estate educational platform with a brokerage, an investor, and a developer track, right? So really excited to get that out there in the world. I mean, it's going to be like a true college style course, aiming for accreditation actually in the next couple of years. So we're going to launch with CE credits. So if you're a broker and you've got a real estate license and you actually need to get your continued education credits and you don't want to take residential classes, because it's basically residential or CCIM. Those are the only 2 options you have today. We will finally be filling that gap with hundreds of courses on commercial real estate. So that means I am spending a ton of time as the educational director, pulling all of these classes together, getting everything organized, and really getting that ready. So we're going to launch that in October. So keep an eye out for that. That's what we're working on this year.
That's wonderful. Go over to www.crecentral.com to figure out what's going on that front, to follow along on the process. It's not the last time that we're going to be talking about this. All right. I don't know what this means, but Tim says he's in, baby. He is in. I'm in. I'm glad, man. Get in there and get
Tim. Go
right?
book a call, man. You'll be on the phone with me.
Let's do it. Okay. So Tyler, your checkout Monday heading to Japan, right? So that's going to be a big event for you. I'm super excited to talk with you whenever you get back, but we wanted just to give you a big thank you and the gratitude for your partnership in 2025. We're super stoked about 2026. I'm sure we'll have 5 to 10 episodes coming out on the show together, vice versa in 2026. I can confidently say that between Kansas City and Nashville, there is not two other people, I think, putting out as much content speaking about commercial real estate, investing, brokerage than these two guys right here. So I also want to be grateful because I think this might be the last show of 2026 or 5 for the Market Pulse. For all of our listeners this year, we have grown substantially, added close to 12,000 people on LinkedIn. The podcast is growing. We've got big ideas about trying to get daily episodes out 2026. And so I appreciate it. I just want to say, I'm grateful for you, Tyler, and the growth and the friendship and the partnership, but also all of our listeners, man. So anywhere else that you want to point people to, I got them going to CREcentral.com, but how should they connect with you?
That's it. I mean, the only thing really is YouTube. It's under my name, Tyler Cauble. Over 600 videos at this point. You can learn just about anything you want about commercial real estate there. So go check it out.
And I will give you one quick postscript. That's what PS stands for. Postscript tip. Don't reach out to Tyler asking to pick his brain because his best content is for free on the YouTube. I'm pretty sure your content has now been watched for over 38 years on YouTube. Is that an updated figure?
Yeah, it's something crazy. We've gotten like 5 million views now, which is pretty wild to think through. But yeah, it's a lot of time. It's a lot of time.
It's a lot of time that people are watching you, and you're giving back, and you're doing it in a big way. So grateful for you. Thanks for joining. Everybody else, thanks for joining another episode of the Kansas City Commercial Real Estate Market Pulse. We got big plans for 2026. Don't know if this is the last show or not of 2025, but I'm going to sign off now. Tyler, thanks again for being here, brother, and we appreciate you and all the listeners. So thank you guys for tuning in.
Appreciate you, Logan. See you guys.
See ya.